Hey, welcome back to The Dive. A hawkish Fed, commodity shortages and inflation, fertilizer prices at record highs, oil, silver, gold, and his favorite commodity trades are some of the topics that our guest will deep dive into today. He's one of our regulars, the founder and CEO of Bubba Trading. Todd Bubba Horwitz joins us today. But before we bring Bubba on, do me a quick favor and show that subscribe button some love. Hey Bubba, nice to see you. Welcome back to The Dive.
Cassandra, always great to be back with you.
Okay, so let's start off with Fed Chair Jerome Powell's recent statement about raising rates. He said that the Fed is prepared to tighten rates above neutral if needed. The yield curve is now mostly higher than it was before the pandemic. Do you think that 50 to 100 basis points will have much of an impact on inflation?
Well, Cassandra, first of all, Jerome Powell is like, where's Waldo? We can't find him. And suddenly he shows up with these potential rate hikes. Now, when you look at the overall yield curve, the curve is actually flattening or almost inverting when you go from notes to bonds. And we're seeing that the 10-years at 2.4 and the 30s at about 2.5. So we can see the flattening here, plus the fact that nominal rates are severely negative still. You know, if you take the CPI, which was an 8 at the last print, and subtract the 10-year from the 10-year notes, it brings you to a negative 5%. So he could actually, in theory, raise 25 times just to get back to even and zero interest rates. And of course, the Fed doesn't care much about inflation. They're continuing to stand on the sideline, much like the administration when it comes to oil.
How much do you see commodity shortages adding to inflation?
Well, this is going to be really ugly. Commodities are exploding, and I think that we haven't even seen the beginning yet. The inflation is not really by the commodities. The inflation was caused by the oil. And because, commodities the fertilizer uses potash, uses a lot of oil. The farmers use a lot of oil for whether it be for heating or for tractors or for whatever. And because 80% of our goods in this country are either moved or made with a fossil fuel. And to give up the control and to not export anymore is one of the dumbest things that any person has ever done, because you have no plan, and your ridiculous green energy plan, which is supposedly based on climate control, cannot be in operation for 40 years anyways. So why would we give up, first of all, the power, second of all, the inflationary cycle that they're now creating, really busting out the average middle class Americans?
Yeah, North America's big three fertilizer producers all ripped to record highs as Russia's invasion of Ukraine nears the 1-month mark. If prices of these raw materials that constitute the fertilizer market continue to rise, what do you think it would mean for the overall global economy?
I think the global economy is in very severe danger here. I think the first thing we have to worry about is food. We're going to have, Russia produces 1/3 of the world's wheat. Okay. So now, and plus they have some key components for fertilizer. You take that out of the equation, we're already going to have a shortage. With the higher interest rates, so many small farmers may choose not to farm next year, which means they're not going to be producing any more grains and things like that. So we're going to be in the position, as Marie Antoinette said, let them eat cake, because that's what the battle was over wheat and bread. And of course, wait till you see what's going to happen in the Middle East, around Egypt and all those countries called the breadbasket that are not going to have food. We're going to have a dramatic shortage of food next year based on what's going on right now. And I don't see it getting better because we keep increasing the population.
Mm-hmm. Okay, so let's shift back to oil. Oil rose above $115 a barrel. Analysts are attributing this to supply risks from a potential EU embargo on Russia and concerns about a tax on Saudi oil facilities. Where do you see the price of oil going forward?
Well, first, let me comment on why they say they're ridiculous and full of crap. Okay. Oil is higher because it's in the control of Saudi Arabia. Oil is higher because we no longer produce it in the United States of America. Okay. It has nothing to do with the embargo. It has nothing to do with anything that's going on. We have enough oil in this country. We have basically a 300-year supply that we get to without much of a problem and become a net exporter, which would solve the problems in Europe and would solve the problems in many other nations, including the United States of America. I see oil probably going to all-time new highs, which is over 147. And I think there's an outside shot that we go to $200 a barrel if the current policies exist at the way they are, and if we continue to have the moderates pushing for this ridiculous green energy deal.
Mm-hmm. Okay, so let's switch to silver here. There's been a big run up for the past couple of weeks with silver, which has since come back down. What are your thoughts on the silver markets right now?
Well, I give you first of all full disclosure. From a trading standpoint, I'm short silver here, but I always own physical, so I'm net long. I think silver is going much higher. I don't think it's today. I think right now it's in a very tightly wound pattern, but it should explode to the upside along with gold and the other precious metals. We're seeing a lot of action here, and I see no reason that it will not at one point here break out of this really ridiculously tight trading range it's been in for quite a while. So I'm very bullish long term, but again, I look at things in two different manners. One is from a trading standpoint, which is day to day, and the other is from a long-term investment. So I'm a long-term investor in silver, and I will continue to be a buyer of silver as it continues to go even higher.
So in one of your recent Bubba Trading posts, you've mentioned that gold continues to go nowhere. Why do you think that is?
Well, I think there's always a lot of things going on in gold markets, and you've got a lot of central banks trying to control the gold market because, again, a lot of things are benchmarked against it. But I think gold will eventually break out. I mean, we were going nowhere with 1800 as the pivot point, and now we've gone nowhere with 1900 as the pivot point. And I would tell you that I think that gold will probably make all-time new highs this year, okay, as we go further. But right now, it's in a very tight pattern, very similar to silver. We're not seeing a lot of explosion, and every time you get a rally, it sells back off, and you're trading in probably about a $50 to $60 trading range. There, 1900 and 1950 or 60. But I do expect the next big move as it coils here tighter to go much higher.
Okay. So one more thing before we let you go here. Do you have any trade ideas or final thoughts that you would like to share with our audience?
Well, yeah, I mean, I think that, trade ideas, I think it's just, first of all, just be careful. I think that you're in a very challenging market condition that I believe there's a greater opportunity for a 50 to 60% haircut of the markets. I think that a lot of this you're seeing today in these markets, over the last week or so, is all retail trade, which is trying to buy the dip for the first time in 12 years, since this whole thing started, thinking it's finally safe. And I think that is a warning sign that it's not safe. I think you should protect your portfolio. I think you should stay in markets, but look for the value propositions, because no matter what happens in markets, things sell off before and start to move in the right direction once the major sell-off starts. And I think that you want to look into some of the safer areas right now, but certainly you want to be involved in energy, because energy is a very hot sector, and I don't see that changing anytime soon, and probably in the fertilizer markets as well, like Mosaic and stocks like that.
Okay, great. Well, thanks for coming on and sharing your thoughts with us again, Bubba. It's been a pleasure to talk to you as normal.
It's always great to be with you. I appreciate the time.
Thanks so much for tuning in today. We'll be back again tomorrow with the latest news and updates. So be sure to follow along by hitting that notification bell and subscribing below.